What's up, guys? Really fast, I'm gonna do a trade recap. Just gonna show you guys and explain why I got into the short right here. This was my second trade of the day. I did go short here and got stopped out at break even. So someone asked uh for me to explain more on how I draw out my zones. So that's what I'm gonna be talking about. But before I start, I'm gonna talk about liquidity. Someone else asked about liquidity too, what it is, how do you spot it. Basically, how you spot it is super simple. You just want to spot out these wicks that are sticking out like this. But for example, this wick right here isn't liquidity, because if you draw a line, like just as an example, if you draw a line, we've already ran past that liquidity, which means that those orders have already been taken. Because the thing about liquidity, basically, it means that there's a lot of orders all the way down here. Either people have their stop loss down there, or buy orders, just orders in general, and the market knows it. And the market always wants your money, right? So, what the market likes to do, not all the time, but most of the time, it likes to take out liquidity, touch these orders down here. So this liquidity right here, it likes to touch these orders and then go the other direction. That's basically what liquidity is. Liquidity sweep, that's a liquidity sweep. Super simple. Okay. But liquidity sweeps don't always happen. You just have to be aware that market could possibly reverse from there. Okay, and then now how I draw the zones, I draw supply and demand zones on bigger time frames all the way down to the 5 minute time frame. So I start on the 4 hour and then I go down all the way to the 5 minute, looking for aggressive buying or aggressive selling. For example, here, this is a good supply zone because it's aggressive selling. So how I would mark it out is I'd use this rectangle tool. I'd draw it out from the base of the candle before the big movement to the wick, like that. And if you're wondering what my settings are for the rectangle, here it is. Someone also asked for my settings in the chart. It's just regular green and red. Keep it really simple with a black background with no words on the background or no grid. Okay, really simple. But yeah, that's how I draw out my supply and demand. Okay, so we're just looking for aggressive buying or selling in every time frame. If so, you see there, we had this 2 hour. What I like to do is if I see a zone on a smaller time frame, like right now, on a 1 hour, I shrink the zone down. Okay, because again, you want to be picky with your trades. And since I'm a scalper, I want to make sure I get a good entry. Okay, so keep things tight. But yeah, so I always start off by looking for supply and demand on bigger time. This would be a perfect example of demand. We have this small candle and then this huge movement up. And you can see how I marked it down from the base of this down to the wick. Now, everyone marks their zones differently. For example, Doyle, if you don't know who Doyle is, that's a little sad. You might be new to trading or something. I don't know. Anyways, Doyle draws his supply and demand like this, I think. And he makes money, right? I draw it like this. I make money. Not as much as Doyle. Doyle's the GOAT. Anyways, however you draw your zone, it's up to you. Just remember, as long as you manage risk, everything's gonna be fine. Okay. Your analysis doesn't have to be to the exact cent, like it doesn't have to be perfect. You just have to be aware of the zones. And that's what I do. So I go down every time frame looking for zones. See, this was a good demand zone too. It looks like this one down here, but just zoomed in. It's a good example. Um, and also keep in mind when you're charting supply and demand, make sure that those orders haven't been touched. Okay. So before it was 10 a.m. So these orders down here weren't touched. Let me replay it also so you guys understand what I was really looking at. Okay. So this is how literally my chart looked. Also, these white lines is support and resistance on a 15-minute time frame. So you can see right here, and I draw it to the bodies, not the wicks. So you see to the bodies, and the yellow lines are liquidity, short-term liquidity, long-term liquidity, small liquidity, big liquidity, whatever you want to call it. I just make sure that I know, okay, you know, there's a wick sticking out there. We might reject from there. We might fake out. That's why I draw multiple liquidity zones. Okay. So this is how my chart looked. And right off the bat, I had a feeling that it was going to be a choppy day because it's the holidays. It's going to be slow. And also, normally when market is slow like this, you see like it went nowhere pre-market, it went nowhere. Most likely when market opens up, it's going to be the same thing. It's going to chop. And if it's a choppy day, it's either going to range or it's going to chop in a certain direction. And that's exactly what it did today. It chopped going down. And I'll show that in a second. And then I'm always flipping between 5 minute and 15 minute. Okay. So right here, this was the first trade that I actually took. I saw this aggressive selling, which created a 5 minute supply zone. And we touched down to this demand zone or zone in general. I don't really call my zones anything because, for example, if it's supply, I don't want to automatically think we're going to go down from there. I want to be open to buying or selling. I want to be open to do what the market tells me to do, okay, by reading the candlesticks. Because I want to avoid predicting. I want to analyze and execute. That's the goal. Basically, I got faked out here. I saw this huge push down, right? And then I expected to it keep pushing down. Eventually it pushed down, but it did pull back, and that's basically, if you want to see these trades executed, I posted a short on YouTube today, and it's basically both of the trades that I took. Those are the only trades that I took too. So my first trade looked something like this. I was aiming for that liquidity. Okay, and then I got faked out at break even, which was good management because I could have let the trade play out and got faked out at a loss. But I knew since we were chopping pre-market and we didn't go anywhere, I knew most likely it was going to be a choppy day. So I chose to break even, knowing that it might go back up because it's a choppy day. And a choppy day is going to go up and down. Wicks. That's all it does. Okay, so we pulled back. I was just being patient here because obviously we're going up and down. And you don't want to get in the trade in the middle of a range. Then your stop loss is going to be, for example, like if I got in a trade in the middle, like right here, my stop loss is going to need to be extra wide. You know, I like having a tight stop loss with a big take profit. Okay. So I said it in the video too. Like, if you want to rewatch it, go watch the short. I said there's a supply zone right here. So if I see a nasty rejection here, that's literally what I said. I said, if I see a nasty rejection here, if we touch up on this and we go back down, I'm going to get in a short. And I did. And originally, I was going to aim for this liquidity. I would have aimed for that liquidity if we weren't so choppy, right? But since we're choppy, I know, okay, I don't want to be in profit and get stopped out. I rather just take my profit. So I trailed my stop. Once we touched this line, I started trailing my stop and I got stopped out at a profit of $800. So yeah, pretty good. I hope you understood that. If you have any and this is how it played out. It played out really nice. And then what I say earlier, I said when we chop, you usually chop in a certain direction or you range. And if we play this out, you could see NQ chop, but it chopped in a direction going down. So if you blew an account today, you got chopped up. I'm sorry to tell you, you got chopped up. So if you lost today, again, make sure you journal, write down what you did right, write down what you did wrong. Okay, learn. Okay, like don't see yourself as a failure, see yourself as a learner. All right, that's all I got for you guys today, though, and I'll see you guys in 2025.